Hello viewers, in this video I'll be going over silver. Today we are up 4.7%, and on the 1 hour chart we are currently overbought on the 1 hour RSI, and on the 4 hour chart we are also overbought on the 4 hour RSI. And as for the 4 hour MACD, we started to converge, and lately we had a spike in volume. So if we expand out to the daily chart, this volume is greater than what we experienced for the past week, so that is a positive sign that this uptrend is still strong. And at the moment, I do see, since we are currently overbought on the daily RSI, we may have a chance to level off and maybe flatten or sideways price action. So at the moment, I do see a possibility that we may encounter support when the 9-day moving average reaches this price range of support of the price of $18.33. So that is immediate support if we do lose steam. So if we expand out to find resistance, a possible resistance is also dated back to support back in, I would say, October or August 2016. We see a price concentration around this range, so this is a potential resistance that we may encounter. So this is a multi-year resistance, so it may take time for it to break. And so if we were to move on higher, that price movement is roughly around, I would say, so if we can see or examine it, that price movement is roughly around, I would say, 1.4% move higher. And as for support, if we do lose steam, that support is around 4.2% move down lower. So let's head to the forecast model. On here, I'll go day by day, where silver will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecasts we should focus on? Ideally, the forecast model that is the best match to the current trend, what we see right here. And the trend I believe is the best match right down here is November 26, 2007 to February 22nd, 2008. I believe this is the best match to the current trend, and then we point why. So what we have here in the beginning of the trend, we started off on the middle Bollinger Band, and then we proceeded to move on higher to touch the upper Bollinger Band at this instance. And let's just mark all of the upper Bollinger Bands first. So we have one instance here, once more here, and then finally right towards the end where we are currently at. And let's point out where it encountered the middle Bollinger Band or reversion to the mean. So we encounter around 3 instances in the current chart. So let's head to the trend in question. So what we have here in the beginning, we see a touch right in the beginning of the trend. And let's mark all the trends where it touched the upper Bollinger Band. So we have one in the beginning, the second one, the third one next, and finally the fourth one right towards the end, right there. So in between those, we see touch the middle Bollinger Band at this instance, between the first and second upper Bollinger Band, and the last one between the third and fourth one. So we have about 1, 2, 3, 4, 5, 6, 7 points. We also have 1, 2, 3, 4, 5, 6, 7 points. So there is reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So let's see the forecast model. Again, the trend that we just examined was November 26, 2007 to February 22nd, 2008. And it looks like silver will continue to move on higher. Back then, silver went up to 8.9%. So there's still a good chance silver may climb higher. So that is all. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.